Yo, what's up YouTube? Welcome back to my YouTube channel, Mide Richie FX right here. And welcome back. It's been a while I uploaded a video. It's been a while I updated you guys about NOOB to Pro. About the NOOB to Pro series. But then we're back. So this is the episode 5, and in today's class we're talking about fair value gaps, right? So stay with me, make sure you watch to the end, and like and subscribe to the channel. Let's get into it. So basically, what is fair value gaps, right? Fair value gaps is like a very popular concept within the ICT traders, right? It's a very good ICT strategy, and it's been used like entry confirmation. It's been used like an entry itself, and a whole lot of things you get. So FVG is just like a very simple thing. And in this video, I'm going to make sure I let you guys understand these things, because I'm just going to explain these things in simplest forms, right? So basically, this might just be the simplest video you've ever watched about fair value gaps, right? It's gonna be simple, straightforward, and on point, right? No bullshit, you get. All right, so let's get into it. So basically, we're going to be talking about the bullish fair value gaps and bearish fair value gaps, right? Mind you, fair value gap is still the same thing as FVG, right? That's just like the short form of fair value gaps, right? So basically, it's just very simple. So basically, what is fair value gap, right? Fair value gap is just like a space, let me say a gap left behind within two candles, right? A space left behind within two candles, right? As I said, this is gonna be like the simplest video you watch about fair value gaps, so just stay with me, right? I'm sure it's explain these things in simplest forms, right? So we don't get lost, right? A space within two candles, right? That's actually what we call fair value gaps. It's actually very simple, right? But then we have bullish fair value gaps and we have bearish fair value gaps. So in this case now, any space, or basically a very good space between two candles in a bullish structure, or that is being created with bullish candlesticks, that's actually what we call the bullish fair value gaps, right? And basically vice versa for the bearish fair value gap, right? Spaces that have been created with bearish candles or in a bearish trend basically is actually what we call the bearish fair value gaps, right? So basically, how do you identify fair value gaps? It's actually very simple. Okay, so first things first, let's talk about the bullish fair value gaps, right? Just go to your chart, right? Identify 3 candles like this. Identify 3 candles like this, and basically mark out each week of the first and the last candle, right? Ignore the middle candle, right? Ignore the candle in the middle, right? So basically, you can see this is actually the lowest point of this candle, this is the highest point of this candle, this is the lowest point of the last candle, and this is the highest point of the last candle, right? So you have business with this with this first candle and this last candle. That's also business. You have no business with this middle candle, because this is actually where the fair value gaps comes in, right? And you're going to use the first and last candle to mark out the fair value gap inside of the candle in the middle. Okay, so basically it's just very simple, right? So first thing first, mark out the highest point of the first candle, which is this one. You can see this is the highest point. Mind you, we're using the wick, not the candle body, right? So mark out the first point right here and drag it to the future like this. And then the last one, the last candle, mark out the lowest point of the wick and drag it to the future like this, right? This is your fair value gap. This is your fair value gap. This gap in the middle, that is exactly your fair value gap. But mind you, we don't trade fair value gaps anyhow. Basically, fair value gaps doesn't really show anyhow, right? They show in a series of candles that are actually well created, in a series of candles that are actually well volatile, not rangy candles, right? Because basically, you notice that you can't really see these things everywhere in the charts or everywhere between the candles. Even if you do, they are going to be very, very small. And if the spaces are small, that's not a valid fair value gap. We need a very, very tangible space, right? We need a very tangible gap. Not too big though, but it should be reasonable, not just a tiny gaps and maybe like you guys call it a fair value gap. No, that's not a fair value gap, right? A fair value gap is supposed to be moderate, not too big. Basically, it can be very, very big, of course, but then it shouldn't be very, very small, right? It should be very moderate or big. Do you get? So that's how to identify fair value gap. So basically, let's just do the same thing for the bearish structure or for the bearish fair value gap. So 3 candles like this, identify 3 bearish candles. I don't know, it might be a mixed candle by the way, but then the trend is just the main thing, right? Identify the trend. So if it's a bearish trend, so that automatically tells you that any fair value gap you're able to identify in that trend is a bearish fair value gap. Same thing for the bullish fair value gap. Okay, so identify 3 candles right here. There are sometimes where this one might be the bullish candle, where the one, maybe the one in the middle might be the bullish candle, blah blah blah. But it should be the trend, right? It's not a must for everything to be a bearish. I mean, to be the same candle, to be the same candle candle direction actually. So same thing for this one, right? Mark out the lowest point of the last candle, and mark out the highest point of this candle right here. I mean the next candle, right? Sorry, this one is the last one, this one is the first candle. You're just dealing with these 3 candles only, right? So this space right here, this space in between, is your fair value gap, right? So that's just how to identify fair value gap, right? Identify 3 candles in a particular direction, if it's a bullish or bearish. So that automatically tells you that direction of the fair value gap, right? So if it's a bullish fair value gap, it will be in a bullish trend, and if it's a bearish fair value gap, it will be in a bearish trend, right? So identify 3 candles in that direction, and then mark out the highest point and the lowest point of the week, and then the space remaining inside of the candle in the middle will be the fair value gap, right? Same thing for the bearish structure. Okay, so anyways, that's how I identify the fair value gap, right? So basically, let's just jump into the real market charts. How do you trade fair value gaps, right? See you in the chart. All right, guys, so basically we are going to be using XAU for this case study, right? So how do I identify fair value gaps on the real market charts, and how do we trade them, right? So first thing first, you need to identify the direction of the market, right? Identify the direction of the market. For this example, this is a very good bullish market structure that we have on XAUSD, right? And basically, even see that I had a fair value gap being marked out where I'm actually expecting the overall buys from, but unfortunately, the market is just like doing what it wants in this region. But I'm not really expecting market to respect this demand though, but we expected it to actually. I'm sitting on my hands currently because the market is not doing what I really want. But that's it. By the way, let's get to the market, to the real topic of the day, which is fair value gaps. All right, so first and foremost, you need to identify the market structure, right? The overall market structure. So for example, here we have a very good bullish structure on XAUSD, right? So how do you identify the fair value gaps? Identify fair value gaps is actually very simple. Just the same thing I taught you guys in the first chapter, basically how to identify fair value gap, right? Simple as that. So just like for example, right? So this is a very perfect fair value gap that actually got mitigated, or that got expected by XAU. So the overall structure is actually bullish. So in this case, we're going to be expecting, or we're going to be using bullish fair value gaps only, right? So basically, you just need to identify 3 candles and then mark out their highs and their lows. As simple as that. So for example, right here, we have this 3 candles, 1, 2, 3, right? This very long bearish bullish candle, right? So we're just going to mark out the high of the candle and then the low of the next candle, which is this one. This is a very good fair value gap. You can see the middle, I mean the space remaining in this candle right here is actually what we call the fair value gap. Same thing again. If you are to use this one, and this one, we're going to do it like this: the first and the last, right? Okay, so I hope you guys remember what I mean about your fair value gap being very, very good and spacey, right? So we can see how small this space is and how big this space is, and you can see exactly how the market reacted from this one and disrespect this one, right? So the bigger it is, the higher probability it becomes, right? And the volatile the candle in the middle is, makes it higher probability. You can see right here, the candle in this middle right here has a very small wick. You can see right here, and the very small wick at the top, right? But then it's have a very long candle body, right? That makes it a very, very, very what's it called, a very good fair value gap initially, right? So the next fair value gap, right after we mitigate this one, we have the record structure. So we expect market to come to expect another fair value gap, isn't it? Yes. So we have this one again, this first 3 candle. We have 1, 2, 3 right here. So we'll mark out from the week of the high to the week of this low right here. Or if the market don't want to expect this one, you can use from this week right here to this week right here. But fortunately, the market couldn't get to this one right here. The market couldn't expect anything right there, right? So let's move to the next one. So next one I actually mark out here myself is actually where I'm expecting market to come to initially, right? So I use this 1, 2, 3 candle, right? This first 3 candle, right? So I actually mark out the first week right here, and the last week right here, right? So you can see the middle, right? The space in the middle right here is actually what's my fair value gap, and I'm expecting market to come there, but you're going to make its way down there, right? So now let's see what the market is actually expecting, or what the market is currently doing, right? So we have a fair value gap right here, right? I can see this first one and this last one. Mind you, I told you guys that the markets can't, I mean, it's not really a must for it to be, same candle all through, right? It's not really a must for it to be the same candle all through. It can be missed, right? So don't get that wrong. So we have another fair value gap right here. We have another fair value gap right here. Although the first one right here is way, I mean, it's a little bit spacey more than this one, but then the market used to expect this one instead and just expect this, right? I think majority of the time the whole thing depends on the market, which one you really want to expect on itself, which one you really want to expect by itself. So that's that about that. So we have another one right here. You can see we have this one, and then we have this one. This is a bearish fair value gap, right? Because the candle that actually, majority of the candle that possess this fair value gap is bearish candles, right? These are 3 bearish candles right here. But we are not going to take this, of course, no, because what? This is against the trend. The overall structure is bullish, so we are not going to like be taking or be working with bearish fair value gaps, right? So basically, that's just that about fair value gaps. So now, next chapter, which is going to be the last one, let's talk about. I'm going to like show you guys a trade that I caught with fair value gaps and how you too can do the same. All right, guys. So come back to the third chapter of this video. So yeah, I'm going to like explain a trade I caught with fair value gap and what I really see to before I caught that trade, before I catch that trade rather, and how you too can do the same. Right, so it's actually very simple. Here in this case, we have been in the bullish trend for a very long while on XAUSD, and basically we need to like continue the bullish movement until we see a change of trend, right? So basically all you just like do in this case, just like mark out your break of structures and mark out your point of interest, right? So in this case, you can be using supply as a demand, so fair value gaps. But for me, I personally try to, I personally think market XAUSD expect fair value gaps and supplies and demands more, right? Sorry. But for me, I actually prefer using fair value gaps most of the times when I'm trading XAUSD, right? So in this case right here, we have a break of structure, a retracement, another break of structure, retracement, and another break of structure. So in this case right here, if you can notice right here, we have a demand and at the same time we have a fair value gap. But the retracement in this right here is actually very, very more closer than fair value gap than the demand, right? And then we break structure. So the market coming back there, we expected the demand, sorry, we expected the fair value gap instead of the demand. Why? Because most of the time, yeah, when we are trading, the point of interest the point of interest that have the nearest inducement tends to work better, tends to work most of the time, right? So that gives me the edge in like taking my buy from this fair value gap instead of the demand zone right here. Okay, because the fair value gap right here have a very good inducement. We have this, we call this one structural inducement, right? Structural inducement. Yeah, they're just inducement, but then we're still going to get there in this whole series. We're still going to get there the whole NOOB to Pro series, but then let's talk about fair value gaps for now, right? So fair value gap, right? This fair value gap right here actually tends to work better because in this case, it has the inducement very, very near to it, right? Instead of demand, right? Let's say in some cases right here, we have the inducement around this fair value gap right here. Before the break of structure, we can say, okay, fine, market means to get this fair value gap at first, and then create an inducement that have a demand zone below. Then we can now be expecting to take a trade from the demand. But in this case, the inducement right here was actually very, very near to the fair value gap, and then I took my buy from there and take profit at the previous side. Right, let me show you guys how I identify the fair value gap. It's actually very simple. Same thing I taught you guys earlier. So mark out identify the 3 candles you want to use initially. Right, I can see out of this whole candle right here, after the execution of this breaker block, we really don't have any fair value gap right there onto this one right here. You can see this whole candles right here doesn't have a space in between. I'm talking about tangible spaces actually. So we can see, mark out this. You can see we use this bearish candle, this long bullish candle, and this third candle right here. And you can see the long candle right there doesn't really have very much wick. It just have a very long candle body, which makes a lot of sense for fair value gaps, right? So mark out the highest point of this bearish candle and then the lowest point of this bullish candle right here, which tends to be the last candle, right? So that is our fair value gap, right? And it can also serve as a breaker block right there, right here. It can also serve as a breaker block because we have something like this right here. That's a breaker block, but then I think breaker block would just be another topic entirely. But in this case, we're just focusing on breaker blocks on fair value gaps. All right, so just get it. So break up fair value gap right here. That's actually how I caught this trade right here. That's around 1 to 9 risk to reward, almost 1 to 10 with around 560 pips target, right? So I mean, I think that's just pretty much everything about fair value gaps. It's not really that hard, right? I mean, a whole lot of people do try to, like, you know, complicate these things to make video longer, or basically to like complicate these things for you guys to, like, you know, just try to like stick around to really guess it. But here you just get going straight to the point, right? Fair value gap is actually very simple. Just satisfy 3 candles, right? And then mark out the highest point of the first candle and the lowest point of the last candle, right? If you're working with a bullish structure, and vice versa for the bearish structure or the bearish scenario. Simple as that, right? So as simple as that. So basically we are done right here talking about fair value gaps, and I will see you guys in the next episode of NOOB next week. Cheers.